State Bank of India has posted operating profit of over 1 lakh crore in FY25 with a net profit of over 70,000 crore. But if you talk about Q4 numbers, the net profit is down 10% YOY. To discuss these numbers in detail, I have with me Chairman SBI, Mr. CS Setty. Mr. Setty, welcome to ET Now. First of all, congratulations for becoming first ever bank to cross operating profit of over 1,10,000 crore. But if you talk about Q4 numbers, there is a decline of 10% YOY. Is it only due to one-off in the last quarter same year, or there are other factors too?
Yeah, the combination of factors. Of course, there is definitely a base effect. Q4 FY24 was an outstanding quarter for us. We had some provisions, write-backs and other things. But I think broadly there is a general compression of the margins also, which also is getting reflected in our NII. If you see, I think almost NII growth is could have been better, and that is also a reflective of the whole of last year. The cost of deposits was higher, while we moderated in the last quarter. If you see, our cost of deposits have not significantly gone up, but on the year-on-year basis, the cost of deposits movement also has impacted the profits.
You mentioned about provisions, which has also gone up significantly. What has been reason for the same?
No, broadly, I think the additional provisioning requirement in the Q4 as was an account of aging provision. As you know, the assets become substandard to doubtful, doubtful to D1, D2, D3, increasing provision requirement. So out of 9,000 crores additional provision we made, around 5,600 plus is an account of aging provision only. So there is nothing unusual movement in the provisions.
After you have delivered 1 lakh crore operating profit, the aspiration was also for net profit of rupees 1 lakh crore. Is it happening this year?
It won't happen this year. See, I think the operating profit to net profit ratio, if you see, we have achieved around 64%, 65% going forward. If we maintain the same conversion ratio, we need about 1,50,000, 1,60,000 crores operating profit. So it will take some time, but our aspiration is not about the profitability numbers, profit numbers alone. If you see, I think one of the things what we must talk about, it, even if you have not asked, is the stellar asset quality what SBI posted. One of the best in the industry, and we consistently have been performing well on that front.
Right. And talk about margins, you did mention that there is going to be some pressure this year, but are you going to sustain over 3%?
The idea is to keep the margins at 3%. This is the effort which we would continuously focus on. We would be strengthening our CASA mobilization, current account and savings account mobilization. We are running special campaigns, activating our branches. We have large branch network. The branch network is critical for mobilization of CASA. And there are so many other things what we are doing on the current account mobilization in terms of transaction banking hubs, providing the solutions to the people, the companies, our business customers, and focus on the trust, societies, associations. These are all efforts which we are making to ensure that the cost of resources remain moderate, so that our margins will be protected.
Right. You did announce rupees 25,000 crore raising this year. Any idea what is it going to be the combination like, or you are still to work on that front, and any timeline if you can give on that?
No, this is a pure equity raising. We have not taken the board approval yet for the other instruments. This is basically equity raising. We will be going to the board sometime during June for 81, Tier 2 and infrastructure bonds. But this enabling provision for 25,000 is purely equity based.
So investors can expect either QIP or FPO this year?
Yeah, QIP, FPO, and these are various options we have. We will see what is the best option to access the markets at the appropriate time.
You also mentioned about the loan growth part this year. You are saying that there is going to be slight moderation. What is the reason for that? And again, are you little conservative in your guidance?
I think we are looking at what is happening on various segments, and also the consumption pattern has to emerge. And we are, in fact, the last numbers on the consumption indicate that the consumption will come back, and movement is there both on the rural and semi-urban areas. It is also based on the fact that if we have 10% nominal GDP, the credit growth generally tends to be 2 to 3% more than the nominal GDP. Based on that, we are placing around that. And in the previous years, the 20% growth rate what we witnessed earlier was also a pent-up demand, and many things which have contributed to that base effect. This also will have some base effect as well as a combination of while we keep talking about the tariff-related uncertainty, I think that global uncertainty also sometimes, new investment probably will be taking some time to decide on.
So, is there any particular reason why corporate loan growth has come down compared to what you were aspiring for? I think the guidance was around 12%. In this quarter, it is around 9%. So, what has been reason for that, and how do you see corporate loan growth picking up in this fiscal year?
So we have two segments, mid-corporate and large corporate. Mid-corporate has done well. We have done about 15% to 16% growth rate there. And on the large corporate, we saw that some of the large companies, particularly PSUs, central PSUs, departments have deleveraged. They got some equity funds from the government. They paid off some of the loans early. So that has led to the large corporate growth getting moderated. But based on the pipeline, what we have, about 1.7 lakh crores on the sanctions, but yet to be disbursed, 1.57 lakhs on the pipeline, we have a good visibility on the corporate side.
Right. One last question before I let you go. One particular order has come from Supreme Court regarding Bhushan Steel. Now, this is not a question about particular entity, but the whole banking sector came as a surprise to everyone. Have you already prepared for that? Have you also done some kind of mathematics? What will be an impact? Because there will be some money which could have come to SBI and you may have to return later.
So we as a policy don't talk about individual accounts, but because it is a systemically important development, I can only share with you that the law firms which are advising the lenders as well as the company are working, reviewing the order, and whatever the steps are required to be taken will be taken.
Thank you so much.